very good afternoon. Let's get into the markets. Asian markets traded mixed on Tuesday, but performed far better than U.S. markets in yesterday's session. This despite the continued fall in the U.S. dollar. During the session, the price of gold it increased just shy of $3,500 an ounce. That's indicative of investors piling into safe haven assets, although U.S. treasuries or U.S. bonds are increasingly looking as if they've lost their appeal. The Nikkei share average ended the session 0.17% in the red. The Hang Seng Index rose by 0.8%, while the Shanghai Composite Index closed up 0.25%. U.S. stock prices slumped yesterday, with analysts attributing this in part to President Donald Trump's continuous public criticism of U.S. Federal Reserve Chair Jerome Powell as he pushes him to cut interest rates to avert a slowing of the U.S. economy. This has caused jitters among investors about the independence of the Fed, which is often looked to for guidance on the economy. The Dow Jones Industrial Average fell by 2.5%. The S&P 500 lost 2.4%, while the Nasdaq Composite Index declined by 2.55%. All right, the all-share index currently is up 0.8% at 90,227 index points. And on the currency front, we see that the rand is trading at 18.62 vis-a-vis the dollar 21.41 against the euro 24.90 against the British pound. Gold is trading at $3,457 an ounce. Platinum is at $963 an ounce, while Brent crude oil is trading at $67.18 a barrel. All right, let's get into the market conversation with Martin Smith. He's a portfolio manager at Anchor Capital. Martin, I was nearly very hesitant to say that gold number because it's a new one on me, that it's gone up so much. What is going on? What is driving the cost of the gold price?
I think you made the point earlier on the introduction where I think you're seeing a large amount of investors piling into safe haven assets. And I think the point around the US maybe losing a little bit of its shine is definitely evident. And maybe the dollar or US bonds aren't kind of as safe as they kind of historically were. So they're looking for new avenues. I think gold is filling that void for investors, especially kind of in the last 6 to 12 months. So I think that's continuing to go. How much further, I don't know. But until this uncertainty kind of subsides, we know what's going to happen with the trade wars and with geopolitics and I think you'll see gold continue to sit at elevated levels, but it's definitely gone a fair way in the last 6 months.
Yeah, well, I won't ask you about the length of the uncertainty because how long is a piece of string? But how concerned are you about Trump's jabs against the U.S. Fed Chair Jerome Powell? And what could that mean for Fed independence? And why is it so important for the Fed to be perceived as independent?
Yeah, so I mean, the Fed has to be independent, like you mentioned, and their mandate is to look after unemployment or employment, and to make sure that inflation is below around the 2% benchmark. So that's kind of what their mandate is, and it's very, very important to have that independence. I think they'll continue to push on the independence front, but you will see opposing kind of views from Trump because he's driven by a completely different kind of narrative. He wants economic growth, he wants the market to go up, and with lower interest rates, that helps that. But the Fed needs to stay kind of true to what their mandate is and protect themselves from an inflationary and from an employment perspective. So they have to remain independent, and that's why you're seeing this kind of butting of heads between Powell and Trump. But as far as I can see it, Trump can't do anything to Mr. Powell because he can't be kind of let go without kind of actual cause. So I think he will remain until next year, May, when his term ends. But until then, I do think we'll see a continued kind of opposing forces hitting against each other.
Yeah. So then, based on what you say, I mean, we've got financial media saying part of the reason stocks are down or gold is up is because of what's happening with the U.S. Federal Reserve. Is that just us in the media making up reasons for why stocks are down? Or is there a genuine concern in the market that perhaps Donald Trump could actually push Jerome Powell out?
I think the fact that we're even asking the question speaks to the fact that there's uncertainty, because if you look at it kind of factually, he cannot push him out because there's no kind of just cause, there's no actual reason why he'd push him out other than having an opposing view, so he can't. But I think the fact that people are asking the question and a little bit unsure and maybe unsure of what President Trump can and can't do and will and won't do, I think that's the reason why you've seen that uncertainty. And I think it just fuels a fire that's already going. There's already a lot of uncertainty. You've already got elevated levels of kind of expensiveness in the US markets. And like I said, the US has had shine taken off a little bit. So you've kind of put all those things together, plus uncertainty and this extra element of the Fed and Mr. Trump, President Trump, you've got another kind of base that's getting eroded. So yeah. I don't think the chances are very high that he'll be taken out, but again, it just adds to uncertainty.
Yeah, indeed. So usually in the past, when we've seen, financial crises, global financial crisis, COVID and other circumstances, we've seen some sort of global intervention where everyone rallies around to try and prevent or stem the bleeding on markets and so on. This doesn't seem to be happening on this occasion. And of course, right now, it's the World Bank and the IMF spring meetings over in the United States this week. Finance Minister Enoch Godongwana and the SAB Governor, Lesitja Kganyago, are going to be chairing a G20 finance track meeting out there later in the week. These discussions come obviously at a pivotal time. Can any of the decisions or positions that will be formed at these various meetings help to turn the fortunes of the global markets around?
I mean, it's a very good question, and I think one that we'll only know kind of after the fact if there's certain discussions or certain things that have happened. But for now, it remains a slight unknown. And I think also it's important to just take a step back and say, like, look, how long has this kind of global crisis on the markets been happening? And I think we only kind of like 2, 3, 4-ish weeks into the proper sell down that we've seen. So it's still quite fresh. I know the COVID kind of interaction or interruption for the rest of the kind of global factors was very, very quick, and that was quite a short-lived kind of sell down, a bit of a V-shaped recovery. But I think this is still quite a new thing, and I think we need to wait and see how global forces and governments and committees kind of interact with each other and what President Trump does. And again, it comes back to the point I was making earlier. There's still so many unknowns, and it's still very, very new. So a lot of it is just wait and see. And I think that's also the way we're approaching kind of investing for our clients at the moment. It's just wait and see, sit on our hands for a while and just wait for the dust to settle, because a lot can happen intraday, intra-week and intra-month, and we're still quite new in this whole thing.
Yeah, no, thank you for that. I was going to ask, how do you then manage your clients' portfolios under these circumstances? But you've beat me to it. Thank you so much, Martin, for your time and insights as always. That was Martin Smith. He's a portfolio manager at Anchor Capital.